Hi. Welcome to Charts Chatter with Chatur Charts, the 3rd June 2022 edition. The day proved to be volatile in the second half, especially with Bank Nifty dragging Nifty also down. And little did anyone realize that such a strong start can be such a dismal end as the indices collapsed and closed in the red, with Nifty closing in around minus 44 points and Bank Nifty dropping almost 335 points. In fact, an intraday drop of more than 750 points. So volatility will stay for some time until the market stabilize, the global cues stabilize. But here is what I thought was an opportunity to actually trade both Nifty and Bank Nifty very profitably during the intraday trades. So in today's session, I'm actually going to be sharing about 5 secrets and 5 simple steps, but $1,000,000 secrets to trade indices profitably. So I am sure that you will find today's video very, very useful. And for those of you who are really looking for stable processes to trade intraday swings in the indices, this video could be very, very path-breaking and useful. So let's jump straight over and start discovering what those are. So the theme is as to how do we make money in intraday trading in Nifty and Bank Nifty. So the top 5 secrets are: determine and use an appropriate time frame depending upon the pre-open setup. So this is so crucial because most traders, especially the intraday traders, sometimes mix up the trade frequency and are unable to determine as to how long do they stay in the trade or how long do they kind of hold it, or is it the right time to enter, or is it the right time to exit. So I think it's very important to determine and use an appropriate time frame depending upon the pre-open setup. So for those of who are already kind of having a long position from the previous day or a short position from the previous day, it's also important to determine as to what is going to be the trading time frame for that open trade. Now, wherever significant gap up or significant gap down is the order of the day, probably a 1-hour time frame is best to kind of keep as the tide and trade. And in case there is a choppy or a very flat pre-open, even a 5 minutes to a 15 minutes time frame can be determined. Now, this does not mean that a 15-minute time frame trade cannot get extended to a hourly time frame. But then one must have the skills enough to determine what kind of oscillators or indicators they're going to use, and so that their trade ends profitably. So time frame is very crucial. And in today's example, I'm going to be precisely illustrating how that time frame aspect was so important. So let's go over and open up the Bank Nifty chart or the Nifty. So we'll start with the Nifty chart. All right. So this is the bear Nifty chart, and right now I am in a 5-minute time frame. So expectedly, as suggested and predicted in the 2nd June video, that Nifty might test 16,800. It exactly touched 16,799, and this is the day high that you see. And then it kind of started moving a little sideways. All right. So there was a huge gap up, 133 point gap up. In fact, the pre-open indicated 133 point high, and Nifty opened higher. So it is natural for any trader to just jump into the trade to go long because of the mind issue where everyone thinks that they may miss out on a trade. But the ideal waiting time for any trade should be at least 5 to 10 minutes before you allow the market to settle down and see as to what it wants to do. So with this bear chart, all one can see is that it attempted a 16,800 high, but thereafter went a little sideways and started correcting. Now, here is where the time frame becomes very important. So if I were to use a 5-minute time frame to see what happened, so one can very clearly see that for the first hour or so, Nifty traded in a range, then thereafter started breaking down. So one can, since it was a high gap up start, so ideally a 1-hour time frame becomes an ideal trading scenario. So in this case, the first hour candle obviously was green because Nifty opened at 16,761 and went to a high of 16,791 and then again closed at 16,762. So obviously it was a green candle that you at 16,782. So sorry. So it obviously was a bullish candle. But the second candle that it attempted, it again attempted a high and then it started breaking down. So once a trader wants to enter a trade at about, say, between 9:30 to 9:45, he could have chosen a 15-minute time frame candle and determined that that was the best time frame to be trading Nifty. So suppose you assume that I, as a trader, have entered this trade at about 10 o'clock in the morning because I waited for 3 more candles. So 30 minutes is my mandatory waiting time that I generally tend to choose. And if I were to have entered this trade at about 10 or made a decision to enter this trade at about 10, obviously my decision would have been a short. The reason is that with 3 candles, Nifty failed to cross over that 16,800 hurdle. So we always knew that 16,800 was a hurdle and we had placed this horizontal bar at that point. So with 3 successive 15-minute candles failing to cross this hurdle, obviously Nifty was not a buy. So the first secret and the first checklist for me is to determine what kind of time frame I choose. So here is where I have already chosen that I am going to be using a 15-minute time frame to trade Nifty. So that is one tick in the box. Now let's see what are the other things that I need to look at. The Bollinger Band, and most people are unable to use this very effectively. And today I'm going to share exactly as to how one should be using it. One should use the Bollinger Band because it's the best tool available to visually capture volatility of the index or stock. So how is that done? Now, until now, the Bollinger Band was off. So I'm just kind of keeping it off. So I'll take you here step by step on how Bollinger Band is used. So this is the first green candle that we saw. And when I start the Bollinger Band, this is a kind of a wave that you see. If you see, this is the Bollinger Band on, this is off. All right. So the Bollinger Band measures volatility. So at open, when Nifty opened 133 points higher, the price bar of Nifty jumped out of the Bollinger Band. So it denotes that the price is so volatile and there's so much of buying frenzy that the candle could not stay within the volatility band. Now, the Bollinger Band truly is a volatility band, and the red line that you see in between is the median, which is at a power of 20. So it captures 20 periods of volatility. So many a times the moving average of 20 and the Bollinger Band of 20 will always coincide with each other. They tend to be very, very close to each other or they'll overlap each other. So I have not used the MA of 20. Instead of that, the median of the Bollinger Band is good enough to kind of give me an indication whether the price is above a 20 volatility index or not. So a Bollinger Band is like a rubber band or an elastic band which tends to expand on volatility. So moment Nifty opened 133 points higher, this band expanded. If you can see, the band is expanded on the upper side and on the lower side. and the green candle, the first 15-minute candle has closed above the Bollinger Band. Now mind well, price cannot stay indefinitely outside of the Bollinger Band, because moment volatility cools off, the price has to come inside the band. Okay. So now why do we say that one needs to wait for 15 minutes to half an hour to determine direction of the trade? Is precisely what I'm going to explain now. The second candle remained equally volatile, the red candle that you see on the right extreme. But importantly, it indicated that in the second 15 minutes, Nifty lost a bit of its steam. It was unable to make a new high beyond 15,799 and thereby closed somewhat lower at 15,785, but still a strong close. The third candle is where the price has partly entered the Bollinger Band on the upper side, and it's a strong candle. So Nifty was again making an attempt to go past the 15,789 mark, but could not. So, but it still made a decent close. Now, candle number 4 is confirmation that volatility will now ebb and come down significantly. So, two important things. One, a red candle, which means again Nifty failed the 4th time to breach a new high. So with 4 failed attempts to go past 15,790 zone, this is proof enough that Nifty should be shorted. So this is the second tick in the box, that the price enters the Bollinger Band and it comes right inside the Bollinger Band. Candle number 5 is the confirmation candle that Nifty will kind of settle at a point lower than the day's high. With 415 successive bearish candles, which did not make a new high. I mean, there were 2 bearish candles and 2 bullish candles, but the setup is one where price is unable to make a new high. The price has gone below the Bollinger Band. The Bollinger Band has started curving inside. So the Bollinger Band that expanded has started curving inside. Candle number 6, the price has taken support at 8 EMA. Now, why is 8 EMA so crucial? So let's examine that aspect now. Make 8 EMA your best bet for intraday trades. It will rarely fail you. It's highly reliable to determine entries or exits, or it also is very, very reliable to determine shorting or long positions. Now, how does it help to determine entries and exits? So, for someone who has kind of taken this trade on 2nd of June and they was long on Nifty, the 8 EMA price point helps you to determine whether you have to stay in the long trade or exit. So, if someone had gone long the previous day, and if today's price falls below 8 EMA, that is the immediate signal for such people who have carried forward the trade to exit the trade and book the profit. So 8 EMA becomes very crucial for entries, for exits, or for determining shorts. So it can actually help you determine your entry for a short position today. So if someone was not long yesterday evening or on the 2nd June of 2022 evening and wants to kind of trade in Nifty on 3rd of June, the price point closure below 8 EMA on the 15-minute candle is one of the most confirmed and safest ways to short Nifty. So here is the secret number 3. The first secret was that we determined the time frame, the 15-minute time frame, excellent for intraday trades. 2, using the Bollinger Band to determine volatility and see whether the price still remains outside the Bollinger Band and continues to move higher. So that failed. The third secret is making 8 EMA your best bet. So with first and second getting complied and the third one getting complied, it becomes very, very easy for anyone to trade. The sixth candle has closed just about the 8 EMA. Now let's see what happens to candle number 6. Candle number 7 managed to hold 8 EMA. Candle number 8, it managed to hold 8 EMA. Candle number 9, it was an attempt that it was as though trying to hold 8 EMA. So anyone who would have wanted to trade Nifty, if this price had closed below the 8 EMA, it exactly took support at 8 EMA. So one should actually wait for the 15-minute candle to close below 8 EMA. So that has happened at the 11th candle, which you see here, the last red candle. The price has closed below the 8 EMA. And this is the most confirmed situation to have shorted Nifty. So if anyone would have wanted to trade Nifty on 3rd of June, they should have shorted Nifty at this point and kept the day's high as the stop loss. So if the day's high was 16,799, that would have been the day's stop loss, and 16,737 would have been the shorting point. So a good 50-60 points of stop loss. Thereafter, you will notice that the price has plunged below the 15-minute 8 EMA, and there has not been a single candle that has crossed the 8 EMA. The green candle here closed exactly at the 8 EMA, and thereafter the 3 o'clock candle was the most steepest fall that we see here, and the price has plummeted to 16,657. So what opened at a 133-point gap up finally gave away and closed at minus 40 odd points of negative close. So 3 factors have helped us determine: 1, inability of Nifty index to pierce 15,799. 2, the Bollinger Band, which is kind of expanded on volatility, and but later on you will see that it has kind of tapered and it has squeezed the price towards the end, which means volatility has died down. So volatility cannot be a permanent feature. It shows up in parts, and thereafter we have to trade it. 3, we also use the 8 EMA as a determining point for either exiting a previously carried forward trade or for entering a fresh short. So after candle number 12, when a short position was taken, the price remained below the 8 EMA, except in one situation where it went above the 8 EMA, but it did not kind of cross the median of the Bollinger Band. So people can stay in the trade because it only made an attempt to close higher, but it has eventually fallen. But we are not going to rely on the 8 EMA and these 3 factors alone. So there are 2 more secrets which are going to look at. The 4th secret is watching and tracking the MACD crossovers coupled with histogram pattern to determine duration or continuation of trade. So if we don't look at the MACD and we were to look at only at 8 EMA, then we would have probably felt that in one of the candles towards the end of the day, it made an attempt to cross beyond the 8 EMA, and we would have exited that position with some profit. But in order for us to stay with our conviction and hold on to the profits, it is very, very important to kind of track the MACD. So now let's try and see what the MACD has done here. So if you notice, exactly at 11:15, the MACD has crossed over the blue line that you see here, is cut into the red line, and the red line has gone above and the blue line has plunged below. So let's see, at 11:15, we were on candle number 7 or 8. Okay. So at 11:15, we were at candle number 8. So regardless of the fact that the price continued to make a new high or a relatively new high and it tended to move up, the MACD had given a sell signal. This is one of the most reliable indicators that one can use. So after 11:15, right till the day end, you will see that the blue line remained below the red line. So once on a 15-minute time frame, you get an MACD crossover and the crossover does not again turn positive. This is the best bet for anyone to stay long in the trade. This is the best bet to stay for anyone to stay long in the trade. So this is secret number 4, $1 million secret. You will rarely find a situation that in a 15-minute chart, the MACD has crossed over and it is falling and the histogram is also gone negative and it's an expanding negative situation. So this is where another conviction is built. You can see here that the MACD histogram gap is widening and the blue line continuously falls, and at about 2 o'clock in the afternoon, the blue line has actually plunged into the negative zone. So if one were to have merely looked at the candlesticks, they would have got confused and they would have exited the position at 2 o'clock, and the real profits actually came in after 2 o'clock. So this is very important. So the reason why I call it 5 secrets is because one has to really look at all these 5 elements together to be able to take decisions. So individually, if decisions are taken merely based on ATMA crossover or a green candle springing up in a 15-minute time frame, one will tend to go wrong. So a combination of all of these is very, very crucial for anyone to hold on to the profit. Lastly, very crucial, the ADX or the average, the ADI plus DI and the minus DI indicator, directional indicator, is very, very crucial. So let's now see what happened to the ADX and what is it doing. Now this is the ADX indicator. So in a 15-minute time frame on the 3rd of June, so when it opened, the markets opened at 9:15, you see that the plus DI moved very sharply and went up, and the minus DI went down, and the black line, which is the average indicator, stayed positive. Thereafter, when Nifty started selling off, you will see that the ADX indicator, the blue line, cut across and started falling. So, but one thing one must be a little cautious about is that the ADX is a laggard indicator and it is one of the last signals to confirm the direction. So we saw that the Bollinger Band was the first to contract. The ATMA fell soon after. MACD was the third one to go down, and the ADX actually came in a little late at about 1:15. So at 1:15 in the afternoon was the final confirmation. So at 1:15, Nifty was still at 15,700 zones. It was still in the 15,700 zones. So if one had gone merely on the candle basis, then they wouldn't have taken this short position. But a combination of all these 5 factors can effectively lead anyone to take up very, very profitable trades in Nifty. Same holds true for Bank Nifty, and probably in the next video, I will try to cover the Bank Nifty trade as well, so that everyone can be kind of aware as to how one could have traded both Nifty and Bank Nifty. So while the setup remains same more or less for both the indices, the stark difference that happened on for Nifty is that Nifty broke down a little bit later in the day, but Bank Nifty was a straight short right from the word go. And probably in the next video, we will cover that aspect as well. All right. So I hope you found this video useful. And if you did like it, please press the like button, share it amongst the trading community, and do let me know if you want me to cover any further setups. Thank you so much, and have a great day. Bye bye.